The Federal Reserve, often seen as the backbone of the U.S. economy, is on the brink of a seismic shift, and it's not just about interest rates. The Trump administration has narrowed its list of potential Fed chairs to 5 candidates, and the implications are nothing short of monumental. Treasury Secretary Scott Bessent confirmed the shortlist on Monday during a flight to Asia with President Donald Trump, setting the stage for a decision that could reshape monetary policy for years to come. But here's where it gets controversial. The candidates themselves are a mix of loyalists, critics, and seasoned insiders, each bringing a unique and sometimes polarizing perspective to the table. The 5 in the running are Federal Reserve Governors Christopher Waller and Michelle Bowman, former Fed Governor Kevin Warsh, White House Economic Advisor Kevin Hassett, and Rick Rieder, a senior managing director at BlackRock. No matter who gets the nod, one thing is clear. The Fed is in for a major transformation. And this is the part most people miss. Bessent, who's leading the search, has been openly critical of the Fed's policies, particularly its handling of the economy since the 2008 financial crisis and the pandemic. In a recent publication, he argued that the Fed's unconventional measures, like bond buying programs, have overstayed their welcome, distorting markets and undermining its independence. His call for a nonpartisan review of the institution raises questions about the Fed's future direction and its ability to remain apolitical. Trump, meanwhile, has been relentless in his criticism of current Fed Chair Jerome Powell, accusing him of being too slow to cut interest rates. "We have a person that's not at all smart right now," Trump said bluntly, referring to Powell's reluctance to lower rates more aggressively. The Fed is expected to cut its key rate again this week, but for Trump, it's too little, too late. The timing of Powell's replacement is equally intriguing. His term as chair ends in May 2025, but he could remain on the Fed's board until 2028, a move that would limit Trump's ability to appoint another governor. However, Trump could nominate a candidate to replace Powell for an expiring term in January, and then elevate that person to chair in May. It's a strategic play, but one that underscores the high stakes involved. Among the candidates, Kevin Hassett stands out for his unwavering loyalty to Trump. As the chair of the National Economic Council and a frequent defender of the administration's policies, Hassett's alignment with Trump's agenda could give him an edge. But is loyalty to the president what the Fed needs? Or should it prioritize independence? That's a question that divides even longtime Fed critics. Kevin Warsh, the youngest ever Fed governor, brings a different perspective. Appointed by George W. Bush in 2006, Warsh has since become a fellow at the Hoover Institution and a lecturer at Stanford. His experience spans both policy and academia, but his views on monetary policy are less clear-cut. Christopher Waller and Michelle Bowman, both appointed by Trump, have already made waves at the Fed. Waller pushed for rate cuts in July, dissenting from the majority, while Bowman, as the vice chair of supervision, has been a key figure in banking regulation. Both have voted for rate reductions, but their approaches differ subtly. Then there's Rick Rieder, the Wall Street veteran with decades of financial markets experience. Overseeing $2.4 trillion in assets at BlackRock, Rieder's expertise in fixed income could bring a practical, market-driven perspective to the Fed. But would his ties to the financial industry compromise the Fed's neutrality? Here's the real question. Can the Fed remain independent in an era of heightened political pressure? Trump's unprecedented attempt to remove Fed Governor Lisa Cook, a Biden appointee, has already sparked a legal battle that's now before the Supreme Court. Critics like Peter Conti Brown, a Fed historian, warn against appointing loyalists who might prioritize the president's agenda over sound monetary policy. "Those are the ones we want as advisors, not central bankers," he cautioned. As the Fed stands at this crossroads, the choice of its next leader will send ripples through the economy, and perhaps even redefine the institution itself. What do you think? Is the Fed's independence at risk, or is this just the natural evolution of monetary policy in a politically charged era? Let us know in the comments below.